accounting for partnership firm, and the third scenario that we will be discussing in this module for accounting for the goodwill. All right. In this scenario, we see that the goodwill, which is brought in by the new coming partner, will be distributed to the old partners. So the goodwill premium, the new coming partner that will bring in the business, is known as goodwill premium. That will be, since that would be distributed among the old partners, there could be two scenarios. All old partners would either be sacrificing because of the new coming partner. Okay. Or there could be a chance that few partners are sacrificing because of the entry of the new coming partner, and few partners are gaining because of the entry of the new coming partner. Okay. So let's see these two scenarios through a practice question. First of all, we'll see that all partners are sacrificing. Okay. So in this scenario, a new partner brings cash for goodwill. Goodwill is 135 and old partners ratio is 3:2 and new profit sharing ratio is 3:2:1 for ABC respectively. Well, the goodwill premium is worked out as total amount of goodwill times 1/6 share. Okay. We can see 1/6 is the share of the new coming partner. So the goodwill premium is 22,500. We know very well that sacrificing and gaining ratio is calculated as new minus old. So new ratio minus old ratio will give us sacrificing or gaining ratio. First of all, let's calculate this sacrificing or gaining ratio. For A, 3/6 is new ratio, 3/5 is old ratio, minus 3. So A is sacrificing 3 times. And B, 2/6 minus 2/5. From here we took this figure. B is sacrificing 2 times. So sum is minus 5 for these two figures. Sacrificing and gaining ratio is 3/5 is to 2/5. Okay. So the accounting treatment will be, first of all, obviously, when we will receive cash as goodwill premium, bank account debit and goodwill premium account credit. So it will be credited temporarily. Okay. And then it will be debited at once. So both of these two accounting entries will be required at the same time. We are receiving cash as goodwill premium. In fact, the old partners who are sacrificing have the right on this goodwill premium. So the goodwill premium will be distributed among the old partners in their ratio of sacrifice. The person who is sacrificing more will get more amount of capital in terms of the transfer of goodwill premium to its capital, and the person who is sacrificing less will get less amount of goodwill premium in the capital. So this is how we worked it out. So goodwill premium of 22,500 will be distributed like this, okay, in sacrificing ratio. Well, the other scenario is that one partner sacrifice and other gains. So the new partner brings cash for goodwill premium. Old ratio is 3:2 and the new ratio is 5:5:2. Okay, for A, B and C respectively. Goodwill premium is 135,000 times 1/6, which is 22,500. You see 5 plus 5 plus 2 is equal to 12. Either we will say 2/12 or 1/6 is the same thing. So no issues at all. Okay. So 1,035 times 1/6 or 2/12, whatever you want to do, gives us 22,500, which is the goodwill premium. And the sacrificing and gaining ratio, the formula is new minus old, which is this. New ratio 5/12 minus 3/5 from here. So this is the new ratio. So this is the sacrificing ratio. Okay. for A. A is sacrificing 11 times. Whereas B is gaining now. Before B was getting 2 slices out of 5 slices. Now B is getting 5 slices out of 12 slices. Okay, got it? Plus 1. So 1 time is gaining. Sum is minus 10. So the sacrificing and gaining ratio will be minus 11 by 10 and plus 1 by 10. Okay? So this is sacrificing and gaining ratio. So using this sacrificing and gaining ratio, we will pass accounting entry like this. This is the same accounting entry in which bank account debit and goodwill premium account credit. And now accounting entry will be changed. Why? Because A is sacrificing 11 times. You see? Yes, 11 by 10 and 1 by 10. So accounting entry is that obviously goodwill premium account should be debited because this was temporarily credited, as I told you earlier. Now should be debited. The person who is gaining will be debited and the person who in fact was sacrificing should be given credit to the extent of his sacrificing ratio. Okay, so this is how we worked out. 22,500 times 11 by 10 and 22,500 times 1 by 10, so that the total amount is 22,500. So this is how we work out the sacrificing and gaining ratio, and this is how we pass accounting entries for this scenario. So the important tip to remember in this module is that sacrificing partner should always be credited and the gaining partner should always be debited. Okay, when we are distributing the goodwill premium to their capital accounts. All right, so remember these tips well. Thank you.